Alan, in our latest Lex In-Depth, you're looking at the oil price, which remains below $50 a barrel as it has been for some weeks now. Now, there's a lot of predictions about what might happen next, but we're looking at the scenario of what happens if we get oil at around $50 more or less for an extended period, a number of years. What happens in that scenario?
Well, first of all, there is a lot of pain. That process has already begun with some of the companies. The super majors, the biggest companies, the Shells, Exxons have responded to what their investors have said is low returns on capital. They began that process of cutting costs and rethinking their projects, a year and a half ago, 2 years ago. So they're already underway, right? They are some of the strongest companies in the sector, really, with the strongest financial cash flow, best balance sheets.
So do they keep investing in projects even at $50 oil?
They will be much more selective. Let's put it that way. And they will put a lot of pressure on their oil service suppliers to cut their costs. And there probably is quite a bit of fat in the industry. There was probably some complacency. The oil price stayed at the same level for a number of years, around $100. So the strongest companies should be okay in the long term, and that's the Exxons, Shells, Chevrons.
But who hurts in this scenario?
Who hurts? Oil services. Offshore drillers who have built rigs. Some of the newest generation ultra-deep water rigs cost $600, $650, $700 million. Their rental rates, the day rates, are falling, and it is going to be difficult for them if they have a lot of leverage.
And of the oil companies, or anyone?
Well, what I was going to say was some of the explorers of oil and gas who have high costs or have what I would say is a lower quality asset, maybe in a difficult region to get to, so it's expensive or difficult to transport the oil out. Just expensive to produce there, they will struggle. And if they have high leverage, say net debt to EBITDA 3-4 times, well, it will be very difficult for them.
And so might we get to a situation where the industry hasn't been investing enough in newer fields because of the low oil price?
I think that's right. Most oil executives will tell you that, if we stop investing, you just can't continue to produce here. Most of them are expecting a rebound. I think that might cause a bit of denial of the new normality of oil prices for a couple of years. But it's fair to say Goldman Sachs is their top 400 oil projects in the world that have yet to be fully sanctioned. And a lot of these do not work. 2/3 do not work at $70. So at this price, it is going to be a bit difficult. So we will probably see a pull back in capital spending. That will eventually have some impact on production and supply and should, bring some equilibrium to prices at some point, but we don't know when.
Difficult decisions ahead for the oil companies then. Alan, thanks very much.